Welcome back, everyone, for the closing event of the Green Swan 2023 conference, the closing panel of our conference. Thank you for joining us back. And I will pass immediately the floor to the chair of this panel, Agustin Carsten, the general manager of the Bank for International Settlement. Agustin, the floor is yours. Thank you.
Thank you very much, Luis. Thank you for for having organized these Green Swan events and others that you have done. They have always proven to be extremely powerful, and I think they have contributed a lot to the level of our debate around the topics of climate change and other aspects. So I'm delighted to welcome to this final panel three really stellar speakers. Let me start with the introduction. First, Stephanie Griffith-Jones from the Central Bank of Chile, Lesete Canyago, Governor of the South African Reserve Bank, and François Villeroy de Galhau, which is Governor of the Banque de France, which, by the way, he's sort of the godfather of the NGFS, a tremendous organization that has contributed tremendously, and Banque de France provides a very capable secretariat. And by the way, he's also the chairman of the board of the BIS. So I also, let me thank the NGFS and both of the central banks here represented, Central Bank Chile, South African Reserve Bank, for helping us in co-sponsoring this conference. Now, this is the final panel of this conference. This final panel has become a bit of a milestone because it really gives us the opportunity to look back at key developments in the past year and what comes in the next one, including in what we and the central banking community have been working on to help us address the climate-related risks. I remember in last year's panel, we had then the opportunity to have with us Christine Lagarde, and she sort of mentioned that this type of panel help us to keep ourselves accountable. So in that regard, I think that we should try to keep with the tradition, and I suggest to organize the panel in the following way. First, I would ask the panelists on their key developments over the past year with respect to climate change and the global efforts that they would like to address. Then we will take a deeper dive into some topics that are of most immediate concern for central banks, namely the real economy implications of climate change and of the green transition, and in what ways central banks can contribute to dealing with these implications. And here I would like to mention the very appropriate phrase that very recently François mentioned in a speech, where he said that central banks do not have a magic wand, so we cannot solve everything, but at the same time we should not act like ostriches, putting our head on the ground and not look what is going on. So it will be very good to hear him and the other panelists on their views about how central banks can contribute to dealing with implications of climate change. And then to conclude, I would ask you to look ahead in the next 12 months and tell us what are your main concerns and what would you like the community, how would you like the community to evolve in our pursuit to a more decisive attitude towards climate change. So with this, let us just move directly to the panel. There is a lot to discuss. So, making a reflection for the past year, there has been no lack of issues to keep policymakers busy, central banks included, obviously, inflation, wars, energy crisis, geopolitical tensions, banking turmoil. Yet, the world has not obviously lost sight of climate change. In fact, some of these crises have prompted people to take improving energy efficiency more seriously and think hard about how to accelerate the energy transition. So just to get ourselves warmed up for our discussion, let me pose the following question and ask you to address it. What, in your view, has been the one most significant development in the past year with respect to climate change and the global efforts to tackle it? And so for this, let me invite first Stephanie, then I'll give the floor to Francois, and at the end, Lesetja, for him to give his point of view. So Stephanie, the floor is yours.
So thank you very much. I'm honored and delighted to be participating in this important and challenging panel. I think two main developments stand out to reply to Roasting Karsten's important question. First, last year gave another dire warning of the deterioration of nature and the consequences. We saw, from a climate change perspective, record temperatures in many countries, reduced river levels, devastating fires, droughts, and many other extreme weather events. At the same time, 2022 saw the culmination of the IPCC's sixth assessment report, and in a significant statement, the report stresses the divergence between the emissions path consistent with the Paris Agreement to limit warming to 1.5 Celsius, or at most 2 Celsius towards 2100, and the emissions trajectories pledged by countries' nationally defined contributions. Quoting from the report, it says, it concludes, current climate pledges to 2030 would make it impossible to limit warming to 1.5 degrees Celsius with no or limited overshoot, and strongly increases the challenges for 2 degrees Celsius. In short, while nature continues to show concrete evidence of potentially devastating consequences of a late climate transition, a late transition is precisely the one we're walking into collectively. The IPCC's warning of no or limited overshoot underscores that the trajectory for achieving net zero towards 2050 is not irrelevant, since even a temporary overshoot above the 2 degrees target can have huge costs for our societies. Not only it makes the transition itself more costly, needing to deploy very expensive potential technologies to remove CO2 from the atmosphere, if that can be done, it also exposes us to crossing nature's multiple tipping points and increases the probability of very bad scenarios, with severe damage to infrastructure and low-lying coastal settlements, as well as natural environments with low resilience, such as mountain, coastal, and polar ecosystems. This should concern us since, as we know, our civilization depends on the services that healthy and diverse ecosystems provide. Furthermore, by severely disrupting the well-being of billions of people, a late transition can set complex dynamics in motion beyond climate, including mass migration, political polarization within countries, and tensions between them. Such a tally of costs would be an order of magnitude larger than those required to finance a speedy climate and environmental transition. We've just heard Nick Stern tell us about how the cost of not doing enough is much higher than the cost of financing the green transition. It is thus essential to accelerate mitigation efforts and complement them with adaptation activities. On a positive note, we are seeing an increasing number of countries with explicit mitigation and adaptation strategies, laws, and policies, as well as more action in climate finance, with several international climate funds, development banks, governments, and the private sector actors providing resources for the transition to a low-carbon economy and for increasing the resilience of climate-dependent industry. But we should be clear that given the scale of the challenge, both policies and the public and private mobilization of capital, important as it is, remains inadequate, implying that the late transition scenario still referred to many as a risk, is gradually and increasingly becoming closer and closer to being the baseline. This is important for central banks to recognize and urgently incorporate into their analysis and policies, always, of course, respecting their mandates, including control of inflation and other objectives. Thank you.
Thank you very much, Stephanie. Now let me invite Francois to give his views on this initial question. Please, Francois.
Thank you, Agustin. And as you said, it's my third participation in Green Swan. It's a yearly event and it's a very good occasion to see where we are. And unfortunately, I can see most bad news in the last year, although there are some good news. But if I look on the bad side, and here I can only concur with Stephanie, last year was a very strong confirmation of climate change. And we saw physical evolutions in almost all our countries, which were very impressive. 2015 to 2022 have been the 8 warmest years on record, and 2023 will likely top all records. I am very impressed by some phenomenon we see in, let's say, Argentina, where the drought probably cost, and Stephanie, you know still better, you are neighbors, so to say, cost about 3% of GDP. By the floods in Pakistan, which probably have a gross cost of 8% of GDP. So nobody can say either that climate change does not exist, does not have short-term effect, including economic effect. And this is unfortunately very bad news. It could be good news if climato-skeptics had disappeared. I strongly hope their number receded, because it's obvious what we see. But unfortunately, still in some remote US constituencies, and I don't need to give names, there are still climato-skeptics who don't want to see the evidence. So more bad news, but some good news on the side of corporates and public policies. I see in Europe, and probably in the US, and probably in most jurisdictions, a growing awareness, especially of large firms, but also SMEs, that they will have to change their behavior, their business model, they will have to green their production. And it's helped by public policies. They have different forms. It's Fit for 55 in Europe, which is a very ambitious agenda, including a carbon price. It's the Inflation Reduction Act, IRA, in the US, with subsidies, but unfortunately no carbon price, but it's already a significant progress. So on this side, we have good news. And can I add a last good news? Because, Agustin, you were kind enough to quote NGFS, so this network for greening the financial system. We created it in Paris. I don't know if I am the godfather, but we have the global secretariat of now 144 members in the Banque de France in Paris. And by the way, we just published yesterday a newest report on what we call transition plans. And this belongs to me to the good news, because here we have probably a new tools for corporates, for financial institutions, and for supervisors to monitor the transition. Transition plans are micro instruments for corporate and financial institutions, but aggregated, they can help to monitor the macro transition. But again, the worries are unfortunately increasing quicker than the solutions.
Thank you very much, Francois. Now, let me turn to Lesetja. What are, from your point of view, what are the most significant developments in the past year?
The thing is talking here, I can't unmute myself.
We can hear you.
Thank you. Yeah, thank you. Thank you very much, Augustine, it's actually been a very interesting past year. It's been tough. And for us here in the South, I mean, I just listening to Stephanie talking about the drought in Chile, what we had in our case was that we had some parts which had drought, and yet we also had floods in other parts of the country. That was actually, for me, quite striking. But we had also reached some dangerous tipping points when it comes to climate change. But the past year had shown that there have also been good tipping points. First, low carbon energy investments surpassed $1 trillion mark for the first time in 2022. It is also the first time we see transition investment matching fossil fuels. The increase in investment was driven by the energy crisis that followed Russia's invasion of the Ukraine, sparking an unprecedented surge in renewable energy investments. In fact, the IEA projects that global renewable energy capacity will increase by some 2,400 gigawatts over the next 5 years. This is equal to all the power capacity installed in China today. And it represents an 85% jump in comparison to the growth rate in the last 5 years. This is significant as it puts the world on track to pass several critical milestones in transition to a lower carbon economy. Electricity generated from renewables surpassed coal for the first time in the US last year. And the IEA expects the rest of the world to follow suit by 2025, when global renewable energy production is expected to surpass coal. Well, these developments are supported by a second tipping point, which is the rapid decline in the cost of renewable energy. It is now cheaper to build a new solar or wind generation plant than it is to burn coal and gas. A continuation of this trend will see renewables plus energy storage being cheaper than coal and gas power. So I've had all of this bad tipping points, and I thought that I should just bring this angle to say the situation, yes, is bad, but there are some significant positive developments.
Well, thank you very much, Lesetia. And let me stay with you and ask you to see if you can comment to us from your point of view. What is your take on the role of technology in addressing climate change? I mean, I'm emphasizing technology. In the past, we have talked a lot about finance, but we need to, I mean, what really matters at the end of the day is whether the necessary changes on the ground are indeed happening. Financing is one aspect, technology is another. Do you have any thoughts about what is the role of technology and what has been happening with technology in this field?
Well, technology has been a very important driver, and I think that one of the things that would come is, yes, we patent, we copyright technologies and so forth. What we need to be cognizant of is that we have got one planet. And so we can't walk away from the challenge that is facing us. And so scaling up some of the current green technologies and developing new ones and increasing the adoption rates are critical for the transition. This was clearly highlighted during the first day of this conference. Clean power will need to triple in the next decade and grow by nearly tenfold by 2050 as the primary backbone of a clean and decarbonized energy economy. Many of us worry when clean power can produce, we worry whether clean power can produce baseload electricity. But with improvements, storage can. And so we're going to be looking at these green technologies, and I think that the issue of storage is actually a big game changer here.
Thank you very much, Lesetia. I would want to give the opportunity to Francois and Stephanie to see if they would want to comment on technology. Francois?
No, there are hopes. If I take the EU case, the EU just announced today that they would select 100 startups, green techs, to help us to accelerate technological change. So there are hopes, but again, the threat is probably increasing quicker.
Stephanie, any thoughts?
I would like to mention, yesterday we had a very interesting panel on new technologies, and the case of green hydrogen was presented, and this is a new modality which can help countries that produce it use renewable energy, but also export it. And for example, in Chile, there's a major effort beginning about investing in the infrastructure and transformation of renewable energy into green hydrogen, and including development of ports. It requires quite an effort, but potentially, and if the costs come down as is expected, it could be a very important source, for example, of energy for Europe. Thank you.
Definitely, yes. We got very valuable opinions yesterday about technology. We really have to look very close into them because it's part of, definitely is a key part of the solution. Now, with this attempt of moving more into dwelling on the real economy effects of climate change, for us in the central banking community is very important to address the macroeconomic impact of climate change and the transition. So I would like now to zoom into this area in a way then to segue into issues related more directly into central banking. Many countries around the world are already facing physical and transition impacts associated with climate change, as you have already mentioned in your first interventions. And these impacts are likely to intensify over time. So in this context, what are the macroeconomic changes, whether positive or negative, do you anticipate in your jurisdictions in the next 2 to 5 years? Specifically, do you expect to see any significant physical impacts on GDP trends or inflation trajectories coming from warmer temperatures and more frequent extreme weather events? And also, how about transition impacts, for example, on GDP trends or inflation trajectories coming from new regulations and mitigation policies aimed at accelerating innovation, replacing polluting technologies with clean ones, or reorienting market structures and practices towards a low carbon future? There is also the issue of potential sectoral transformation and reallocation of resources, which also will have an impact on the structure of the economy. Very broad questions, precisely to give you the opportunity for you to develop these topics in the way you think is the best, given your experience. So let me invite, in this case, Francois to start with this section of our panel.
Thank you, Agustin. I couldn't agree more with you. This question of what I call the macroeconomy of climate is absolutely key for us as central banks. And you quoted in your introduction my sentence about the two temptations for central banks. We don't have a magic wand. And there is probably an illusion that facing such a difficult situation, central banks and more broadly green finance will settle the issue. No, we cannot settle the issue alone. We need public policies, including carbon price, probably, and we need private transitions, as said earlier. But there could be, on the other side, the ostrich temptation, saying we cannot do anything and our mandate is focused on price stability. Let me simple. And I am aware that there is a hot political debate around this question of central bank's mandate. There are different legal situations. If I take the ECB example, we have a primary mandate of price stability and we have secondary objectives, including environment. If we attain price stability, then we can include environmental objectives. It's not the case for other central banks. But for me, the issue is very simple. Let us suppose we have only one mandate, which is price stability. And all of us have in common this mandate. On behalf of this one mandate, principal mandate, we have to care with climate change because we were eloquent enough in the first round of discussion. Climate change has already macroeconomic effects on activity and on prices. Think to food prices, for instance, which play a very significant role in the inflation threat we have at present. So it's not a long-term question, the macroeconomy of climate. It's a short-term challenge, and it's part of our mandate. It's not mission creep. It's not politicization. That said, what can we do? What can we say today about this macroeconomic effect? Let us first acknowledge that there is a significant veil of uncertainty due to the physical acceleration of climate change, due to technology, we discussed it earlier, and due to public policies, which is probably the most uncertain part of the story. So it's why we have to work on the basis of scenarios. And let me be a bit more precise on the NGFS deliverables. We have 6 long-term scenarios, long-term meaning 2050. We will add a 7th one. We will update them next autumn. And these 7 long-term scenarios are consistent with the physical scenarios of IPCC. But there is a need for shorter-term scenarios, shorter-term meaning focused on the transition and 2030. And here again, we have a veil of uncertainty. I have some slides. I know it was forbidden, but with your permission, I promise they are very short. If we can perhaps go to the first slide, and this is very simple matrix, because we don't know yet. There can be positive effect on inflation or negative. There can be also on the output positive or negative effect. And here is a combination with the 4 panels of these 2 dimensions. We can even think of a solution, a situation where the transition, if there are significant investment on the supply side, financed mainly by private capital expenditures, this is the right bottom panel, we have diminution of inflation and increase of output. But let us be honest, probably there is a probability, a higher probability that the left top panel, which is more negative supply side shock, is more plausible. And this is what we saw with the war in Ukraine, which added like a negative energy shock. We don't know yet, but our guess is probably that there will be an inflationary effect of 0.1, 0.2, 0.3 as an average during the transition. We will work on these short-term scenarios, publish within GFS a conceptual framework till the end of this year, and try to elaborate on them. It's trying to giving a common language to all central banks and public authorities. And then each country uses this language for its own and more specific scenarios. Just perhaps to illustrate, if I come to the next slide, we did a kind of exercise in the case of France, and you can see that there are very different outcomes. It's a number of quarters, and you see the inflation in red and GDP in blue. It's a negative shock at the top left. It's a positive one, slightly less plausible in the bottom right. I will not insist too much, but we have to work on this set of scenarios, be they long-term or short-term. If I still have perhaps 3 minutes, let me come to, despite the veil of uncertainty, probably the 4 conclusions we can already reach for economic policy and especially monetary policy. And if you agree, it's the next and last slide. First, we know that for sure it's a shock that is global and that is certain. We don't know exactly its magnitude. We are not sure about its direction, but nobody will escape the shock. If I take a comparison, remember the discussions about globalization 30 years ago. We knew it would be global by definition. We knew it would be certain. We had more indication about its direction. It would be a positive supply shock, but we didn't know precisely its magnitude. In the case of climate change, it means a very simple thing, that an orderly transition will be less costly than an abrupt change and waiting for too long. And this is the common lesson of all scenarios. An orderly transition is more costly in terms of inflation and activity. So everybody agrees in principle to say, oh, okay, fair enough, the transition must be orderly. But in practice, it will be extremely difficult. Or we really have to prepare ourselves because we live in democracies for most of us, and having a long-term view for an orderly transition is difficult for democracies. And second, we live in national democracies where it is a global challenge. So how can we, and we have cross-border solution, and coordination will be of the essence. Second, we need that the transition will mean higher volatility. And this means a strong commitment of central banks to preserve price stability. There is this debate, Augustine, I don't want to be too long, about should monetary policy look through the shock on energy prices due to the transition. Lesatia mentioned earlier renewable energies. We know that for a while they are more expensive. If there is a carbon price, it will be also a significant shock. But our strong recommendation is not to look through, because it will not be temporary. It will be a lasting effect. And if we look through, we will increase the volatility, increase the uncertainty in this transition for private agents. So probably monetary policy will have to react to the long-term, durable, persistent inflationary effects of the transition. Third, I mean market alignment. And this is a limit of central banks' intervention and even of public policies. We need private transition. I insisted on the corporate transition plans. We all know that if we have no strong market incentive,
that old thing you go feeling on,
including a carbon price in one form or another, it will be very difficult to have this market alignment. And we know that carbon price is not especially easy and is not popular. It can have the form of tax, it can have the form of quotas with a price for corporates, but we will not escape it. Central banks' operation can play a role. It's less important than carbon price, but we can give signal. And if we incorporate in our purchases, corporate purchases, and in our collateral, the degree of transition by firms, it's a strong signal which will help for market alignment. And let me conclude with the fourth recommendation and prescription. And this one is probably slightly more optimistic than the conventional view. There are many debates about the level of investment which is needed. We all know it's very significant. Probably the magnitude, if I look at Europe, if I look at France, and I guess it's not very different from other jurisdictions, is about 2 and 3% of GDP of additional investment yearly during the transition. It's very significant. There was, by the way, an important report by Jean Pisani-Ferry published last week in France with the same magnitude. We could say it's much too much. We have already high public debt. We will not solve the issue. We will not fund it. I think we can. We can because we have significant private savings. If I look at Europe, there is a significant external surplus, which happens to be in the same magnitude, between 2 and 3% of GDP early. So we need blended finance. We need a significant part of the investments to be funded by private investment, green finance, but this will happen only if there is a significant market incentive. And this refers to the prescription number 3. But if we have the right market incentive, if we have an orderly transition, if central banks play their role in diminishing volatility, I think that the question of funding will not be the most difficult one. We will have the solution. I tried to be clear with our still open questions, but we will very probably discuss this first, convictions and prescriptions. I stop there.
Thank you very much, Francois. A tremendously rich commentary, and I'm sure we'll have a subsequent window to elaborate more, especially looking more into detail into the whole gamut of options where central bank's intervention in this topic could be advisable. So let me now pass the floor to Stephanie and then to Lesetja to get your views on the macroeconomic impact of climate change and the transition, and why is this important then for central banks. So Stephanie, please.
Thank you very much, Agustin. I think the areas where central banks can contribute to supporting the transition differ by central bank because they don't have the same mandates and the same economic tools. However, there are several common areas in which our institutions should advance and contribute towards a more sustainable economy. And one can stress 3 main lines of action, I think. Macroeconomic analysis, financial risk assessment, and the provision of economic environmental statistics. First, we think that ensuring macroeconomic stability in line with the price stability mandate of central banks requires adopting a forward-looking approach in which decisions are based on economic projections, even though these are, of course, complex because of the high degree of uncertainty in the case of climate change. One of the most important challenges and immediate challenges that central banks face is the introduction into their analysis and projection models of the macroeconomic impacts arising both from physical damages related to climate change as well as the transition effects associated with mitigation policies that might be adopted. Certainly, this analysis of climate change and transition policies poses big challenges. But there is a comparative advantage that central banks have, given the expertise they have accumulated in the last few decades in terms of data-driven structural modeling. Second, ensuring the long-term stability and resilience of the financial system, in line with the financial stability mandate, which most central banks have, can be pursued through 2 lines of action. One, incorporating climate risks into financial stability assessments to identify and address vulnerabilities in the financial system. And secondly, and perhaps even more importantly, enhancing risk management, regulation, and supervision practices to take account of climate risks. I think that it's very important, based on the best possible data, the best possible models, to think of ways of regulation that both reduce financial stability risks and indirectly may actually, by making sure that there is not excessive investment or finance into so-called stranded assets, it may indirectly also encourage greater financing for low-carbon activities. Thirdly, in the specific case of the Central Bank of Chile, our mandate also entails the elaboration of macroeconomic statistics and has become clear that incorporating the implications of climate change and environmental degradation more generally into our analysis requires a systematic strategy to produce statistics to breach important data gaps and start pricing and incorporating nature into decisions of different actors. Thanks.
Thank you very much, Stephanie. Lesetia, please illuminate us.
I must illuminate you. This becomes a different take. Actually, I would like to, when we think about this impact on the macroeconomy, I want to first build on what we had said about technology and how this thing actually comes in. I think that the first point that I wanted to make is that relative price signals are very important. And to the extent that relative price signals are not working, the transition is not going to work. There are many ways to change relative prices and returns in the economy. These drive structural changes and are always the priorities of government. Carbon pricing is considered the most effective and efficient instrument in changing the relative price of carbon-intensive goods and services. Yet, carbon prices remain low, and governments try to achieve these relative price shifts using the best options, including putting pressure on central banks to do more. The instruments that we offer as central banks are less effective. They violate principles of neutrality, they lead to mission creep, and can obscure relative price signals. So being asked to do more to facilitate the transition is tempting, but it requires a careful approach, which then brings us to the issue of, well, Francois said at this point, well, it's not us, it's somebody else, but we have a role. And the question is, how do we play a role within the broader society, sticking within our mandate? We know that this has got an impact on real economic activity, and this transition has got to take place. We have got to decarbonize the economies. But the impact of climate change is also real. And in our case, the floods and the droughts that you have talked about in Chile becomes an important issue to consider here, because one of the key drivers of inflation in the developing world, given that you find that the poor spend more on food than the well-to-do countries, means that we cannot, our normal, we will see through the shock in food prices. We have got to confront the thing that this might be with us for a little bit longer, and then it leads to persistence, which puts a significant challenge for us as central banks. The next issue, though, has to do with our role in the regulation of the financial sectors, to the extent that we are responsible for that in the central banks. And the question here is, do we understand the risks that the financial sector is faced with respect to climate change? Do we understand how resilient the financial sector is to be able to respond to that? And we face a challenge, because some of the arguments that would come from mainly environmentalists would argue that, well, you chaps tinker around with your prudential regulations to drive the private sector, the financial sector, to actually deal with the issue of climate change. That poses significant challenges, because that means that you are trying to use the same instrument to pursue a multiplicity of objectives. So let me just sum this thing up, and just a South African experience. So we decided that we have got this just an energy transition. We would like to move more towards the renewables, And as we move towards more renewables, a Department of Industry, for example, will say that, well, we would also like to localize, we would like to build our own renewables sector, which could actually raise the cost of the transition, because it doesn't follow that if you are producing these things yourself, they are necessarily cheaper. So the interaction, then it brings the interaction now between what we do in the financial sector, what the Ministry of Trade or of Industry is doing, and what the environmental ones are saying. And it's going to be very important in that setup that the central banks define very clearly what it is that we are doing and stick to our knitting. Yes, we must continue to pursue price stability. We must ensure the stability of the financial sector, but understand that if we are not alive to the risks of climate change, this financial sector itself could be at risk.
Thank you very much, Lisette and Stephanie. And Francois, I think we have already make a very important incursion into the effects of climate change into the macroeconomic scenario, also how the transition will affect us. Many of you already pointed out some key aspects that need to be taken into account on the macroeconomic front by the central banks, but also how this, in a way, should be mapped into some of their actions. So let me dwell deeper into this. And I think this would be very useful given what Francois already mentioned several times. It's this veil of uncertainty, of policy uncertainty. How can central banks help to clarify a little bit this veil of uncertainty? Certainly, the ball is not all of it, and probably not primarily in our court. But definitely, I think to have more clarity about what central banks can do, I think would be very useful, just to make it clear what our contribution can be, and also to settle a little bit more this discussion about the mandates. There are many issues where central banks can contribute, like given its convening power, given its intellectual power, analytical capabilities, scenario analysis. You mentioned it, Francois. And the different price impacts that were mentioned both by Stephanie and by you, Lisette. So let me push you a little bit more and tell us with more precision, what is your central bank doing? How are you focusing your actions, your priorities, in terms how central banks can contribute the most in this very important quest? Let me start again with you, Francois, because I think in your previous intervention, you were polite enough to give the floor to others, but it was obvious that you had more to say.
No, thank you very much, Agustin. Let me share where we are in this regard. And I hope that the Banque de France case is parallel to probably most other experiences. To be honest, the first responsibility we took is a supervisor. Not all of us are supervisors, but as supervisors, it's obvious we have to monitor climate risk within financial institutions. And the first message of NGFS, by the way, it's a network of central banks and supervisors. We happen to be both. But the first message was that climate risk is part of financial risk. So for banks or insurance, it's not a nice to have, it's a must have. And we oblige them to have, or we invited them to have first disclosure, then stress test now, and probably in the future transition plans. So these are free tools we use as supervisor. If I come to the central bank side, which was probably the core of your question, again, I think that whatever our mandates are, and here I have perhaps a nuance with Stephanie, but to be discussed, whatever our mandates are, even if it's only price stability, we have to care. There was probably, to put it in a nutshell, there was probably a focus on operations. How can we green our operations? And it's a significant part of our ECB strategy, which we adopted and developed with Christine Lagarde since 21. So it's the idea, do we incorporate the climate risk and the transition plans in the assessment of our collateral, of the value of our purchases? Do we go as far as having a green refinancing facility like the Bank of Japan has, for instance? We didn't adopt it for the ECB because it's not linked to financial risk. But this is focused on operations. I think it's significant. As I said, it's part of market signaling. But let me stress a significant but. I think that what we called earlier the macroeconomy of climate is still more important. This is our analytics. How can we incorporate the economic effects of climate risk in our modeling, in our forecast? And it's not easy at all because there is this veil of uncertainty. But for me, it's still more powerful in our monetary policy decisions to incorporate climate risk, to fight the uncertainty, to fight the inflationary effects. In this regard, I would say with modesty that we are only at the start of the road. Let me perhaps have a last illustration. Again, the ECB green agenda or climate plan was seen as a pioneer, a very important one. But probably including NGOs and ECB watchers focused on the operation side, purchases, collateral, etc. They didn't notice enough that the first point in our green agenda is this modeling of the climate effects. So this is where we have to work. I could perhaps add a last element, which is more of signaling. We have also non-monetary portfolios. We have our own funds. We have, in our case, our pension funds. Here, we try to be, as investor, very responsible. We committed to have a full alignment of this portfolio, not only with the 2 degrees objective, but with the 1.5 degrees objective by the end of this year. It's a smaller part of our balance sheet, but it's a very strong signal.
Thank you very much, Francois. Let me now go to Lesetja this time, and then Stephanie. Lesetja, please.
Thanks very much. I have a sense sometimes that you must ask Francois to speak last, because he has got so much to say that when you follow him, there is almost very little for you to add, and that becomes a big issue. But what we have been doing as a central bank is not very different from what the other central banks have been doing. We are preparing for a climate stress test in 2024. We are doing some work to understand the implications of climate change for monetary policy, as well as to develop capacity to deal with climate change related questions. Our view is that our most important contribution in the short run is to get financial companies to think about climate change risks through the micro-prudential framework. This includes work around the role of transition plans, the introduction of green taxonomy, and disclosure rules in the regulatory and supervisory frameworks, or the development of climate risk indicators. Data gaps remain a major obstacle to assessing the impacts of climate change on the financial system, and developing appropriate responses, and hence, this is also a large work area for us. We coordinate our activities very closely with government to ensure that we support their efforts and also to avoid mission creep.
Excellent. Well, thank you. Thank you very much, Lesetia. Now, Stephanie, what is the Central Bank of Chile doing with respect to climate change and so on? And in a way also to elaborate on further the actions that the central banks can do to address this issue.
Yeah, very, very key question. Thank you. In the case of the Central Bank of Chile, a first line of work, and here I see a similarity with what Francois was saying, is our medium-term research agenda to incorporate climate and more broadly environmental concern into our standards toolkit for macroeconomic analysis, including both the effects of transition and physical risk, as well as new opportunities generated by the green transition. And these tools will be used to assess the implications of environmental degradation and the green transition on long-run potential growth, as well as short and medium-term questions, including crucially, of course, the evolution of inflation and financial stability. In this regard, as a second line of work, the agenda includes the analysis that climate risk poses to financial stability. In Chile, differently from the ECB, the main financial regulator is not the central bank, but the Financial Markets Commission. So changes in regulation of disclosures and financial practices lie mostly beyond our central bank mandate, but we plan to contribute, and we are contributing, by producing information and analysis for climate risk assessments that complement the efforts of and are an input to the financial regulator and can serve as a guide to other financial institutions and businesses. A first step in this line was the exposure analysis to physical and transition risks of climate change, which was published in the first half of last year in our financial stability review. For example, a quantification exercise was done of all real estate properties exposed to physical risks, which showed that the northern macro zone and the center of the country, so a large part of the territory, will be highly exposed to the projected decrease in the availability of water resources, a very serious problem here, and increases in temperature. Also relating to transition risk, initial work was already done to identify the assets located in sectors with a high carbon footprint, which might be the most vulnerable to policies aimed to achieve the goal of a low carbon economy. The bank is also committed to keep monitoring and reporting on possible risks that climate change poses to financial system stability through its traditional policy documents and the Financial Stability Report, of course, within the limits of its legal mandate and authority. And being aware how global is the nature of the challenges ahead of us, the Central Bank of Chile has developed its work agenda along with other counterparts, particularly in the Network for Greening the Financial System, in GFS, which has really given us valuable and wealthy experience and rich experience and valuable knowledge. We, of course, also maintain an active presence in international financial institutions, such as the BIS and the Financial Stability Board. Finally, as a third line of work, I want to give some remarks regarding the work of the Central Bank on environmental economic statistics, and particularly the measurement of natural capital. The Statistics Division of the Central Bank of Chile is working on the development of methodologies for measuring Chile's natural capital, in line with the framework derived from the UN System of Economic and Environmental Accounting. Models of economic system services translate the state of ecosystems, for example, forest, land cover, or fish stock, into spatially explicit ecosystem service flows and benefits, like water regulation or fish provision. And thus, natural capital can be systematically measured and monitored based on its contribution to production and societal well-being. Also, these economic system services accounting can be used to inform public policies related to measuring the impact of climate change adaptation strategies and mitigation strategies and the implementation of nature-based solutions, and 8, to mobilize investment towards a transition to a sustainable nature-based economy. A taxonomy that includes nature-related goals can provide valuable information to the private sector as well to achieve. More generally, the economic valuation of nature's multiple economic ecosystem services is crucial for having a framework that correctly prices nature to allow for better decision-making. In summary, at the Central Bank of Chile, we're maximizing efforts to incorporate climate and environmental concerns into our work through the 3 lines of action that I just mentioned, which are macroeconomic analysis, financial risk assessment, and the provision of economic environmental statistics.
Thank you very much, Stephanie. Now we're approaching towards the end of our panel, a very rich interaction already. Definitely, I see through the years a very important deepening in the central bank involvement in this topic. I also see not only more intensity in the key aspects, but other broader involvement really trying to exploit all the comparative advantages that central bank has and that can contribute towards this key societal purpose of being able to really tackle the climate change issues. Now, as this panel really is our way of transitioning into the next year, I would like to ask you a final question, which is, which is your biggest worry in the next 12 months with respect to the global efforts to tackle climate change and related risks? And at the same time, what do you see as the biggest cause for optimism? Now, so that Lesecha doesn't feel limited, let's start with him. Then we'll give the floor to Stephanie and the final word to Francois. So, Lesecha, please.
Thank you very much, Augustine. I think that maybe let me start with one of the more important causes for optimism. This is that green funding is increasing rapidly, as well as the development of new financial instruments, mainly blended finance. And Ravi yesterday he spent a bit of time talking about the role of blended finance in the climate space. And this can reduce the risk profile of some investments and provide and mobilize private capital. There is a need, however, to improve access for less developed countries so that we can avoid an uneven transition. We are on one planet. The effectiveness of these instruments in emerging and developing economies is linked to their ability to manage currency risk. It is also linked to addressing some of the homegrown obstacles to private investments in different sectors, as discussed earlier. The biggest worry in the next 12 months is the current economic situation. Inflation is still high, growth is slowing, and some countries are facing significant fiscal and capital flows risks. Tighter funding conditions globally and high inflation have increased yields for emerging countries that are trying to consolidate their fiscal positions. The slowdown in capital inflows has exposed significant fiscal vulnerabilities, highlighting that what was considered sustainable before is less sustainable now. So faster consolidation might be required to bring yields down and increase fiscal multipliers. At the same time, monetary policy is faced with currency depreciation and stronger second-round effects. And as policy rates rise to counter inflation, even funding space in the short end of the yield curve becomes costly for fiscal authorities. Our most immediate objective, in line with our mandates and in support of green transition, has to be to bring back inflation back to target. We can buy green bonds, we can extend green credit lines, we can reduce our own carbon footprint, but if we fail to control inflation, then we have failed the green transition.
Thank you very much, Lesetia. Let me give now the floor to Stephanie.
Thank you very much. Building perhaps on Lesetia's important point, it is true that in the short term, the challenges of inflation and of limited fiscal space, including possibly dangers that come from financial turbulence, even in the advanced economies, are limiting further the ability to focus on the long-term challenges of climate change. So I think this is a difficult task because at the same time, central banks have to, of course, do their main job, which is to fight inflation and promote financial stability, but they also have to think of the long-term challenges. But I think that beyond the macro challenges associated with the transition, which include, of course, potential increase in cost of capital due to the magnitude of the required investment, I think it is also important to stress that the transition to net zero, and here I'm talking about the causes for optimism in your question, that any large-scale structural transformation requires large-scale investment, which can have positive net economic benefits in the medium term, beyond improvements in our environment. These include, of course, in the medium and long term, possible lower energy prices, which will benefit lower inflation, as well as new jobs and new projects, new sectors in the industries that will thrive in a more sustainable global economy. And for example, the case of Chile is a good case because its deserts are among the zones of highest solar radiation in the world. Its windy coasts provide plenty of cheap wind energy, whether to be used directly or transformed, for example, into green hydrogen for domestic use and for export. And it possesses abundant commodities used intensively in the green infrastructure and the electromobility transformation, particularly copper and lithium. And if one looks more broadly at Latin America and the Caribbean, it seems to have 2/3 of the world's reserve in lithium and a major part of copper resources. And I think this will also be important in the case of Africa, which also has a lot of potential and availability of these valuable commodities. So therefore, even though it is a particularly well-endowed country, the enormous economic opportunities illustrated by the case of Chile for the green transition are, to a certain extent, a general feature of many countries in the environmental transition. So one could perhaps conclude that the urgency and the scale of the challenge urges us to take advantage of existing and new technologies, as were discussed yesterday, to create opportunities that can not only be beneficial for the environment, but also in this kind of Schumpeterian perspective for the economy in terms of job creation, new companies, new enterprises, and hopefully sustainable and more dynamic growth. Of course, to achieve this, it will be crucial to pursue both domestic, internal, and as well as international collaboration at all levels. Because if we don't do this collaboration, if we don't take enough measures, the cost of failure is unacceptable. Thank you.
Thank you very much, Stephanie, and I join you in this call for a continued and enhanced international collaboration, because we are all in this world, in this planet, and we have to care for it collectively. Now let me give the last word to Francois. Francois, the floor is yours.
Thank you, Agustin. It's a huge advantage of speaking last that I can use the best ideas of my friend Lesetia and of Stephanie. And let me rebound on two agreements I have with Lesetia. First, I agree that our top priority is fighting inflation. And we cannot add uncertainty to uncertainty. if we have the uncertainty of climate change plus the uncertainty of price instability, we will never succeed. The good news there, Agustin, I am ready to bet that in the next Green Swan edition, in 1 year, we will have made significant progress in overcoming inflation. When I look at the euro data published this morning, we went from 7.0 to 6.1. And especially for core inflation, we went from 5.6% to 5.3%. It's a first significant decrease. So the fight is not over, but we will overcome inflation. And second, I agree with you that there is a significant volume of blended finance or green finance available. But there is a condition, and let me insist on this prerequisite. We need to have enough green projects which are profitable. My guess is that we won't lack funds. When I look at present, we lack enough green profitable projects, and this is linked to the question of carbon price. Sorry to come back to it. Without enough green projects, our green finance engine will idle. Okay. Can I just try to answer your question about the fears and the hope, Agustin, focusing on the public side, on the side of public authorities and political forces. And I see, when I look ahead, dispersion forces and convergence forces. And dispersion forces are for the worst, and convergent forces could be for the better. I don't know yet what will be the balance. But if I look at the negative side of dispersion forces, there is this US polarization around climate, and frankly, it's very bad news. And we will have an electoral year next year. We don't know what will be the outcome, and it has already effects. Can I share a worry about the future of the net zero alliance, be it for insurance or for banks? We all remember this was a very powerful move initiated by our colleague, former colleague Mark Carney. Remember the Glasgow conference? It was a significant hope. There is a risk, let us say it, that due to some political pressures in a significant number of US states, and we know it's associated to political polarization, the number of members, be it on insurance or banks, shrinks rapidly. And this would be a pity. Yeah. So here I see a strong dispersion force. Also, when I look at geopolitics, I'm not a specialist, we have this obvious question of the Russian war in Ukraine. In the long run, we can hope that it's a reason to accelerate energy transition, especially in Europe. We must reduce our dependency. But in the short run, we could say there is another priority, and it will be another priority for international coalitions, for our political leaders, etc. So I put this rather, at least in the short term, on the dispersion side. On the convergence force, there are significant ones, and again, I don't know the balance. But Stephanie rightly called on international cooperation. Here I see some positive trends. I see the general move by central banks. We discussed it a bit earlier. I see the increased membership of NGFS. And frankly, we are very impressed. We started 5 years ago, it was December 17. We started, we were 8. We are now, as I said, 144. And there is still the same enthusiasm. I sometimes say with a smile, central bankers can be enthusiastic. It can come as a surprise, but we see it in NGFS. And we have now the Fed around the table. So I strongly hope we can work together on all the tools and avenues we mentioned today. And can I add, among the international convergent forces, this question of the green standards and the ISSB endeavor? If we can deliver, it will be a huge progress because it will be a common grammar for corporates and their reporting. It's not yet won because we will have regional standards. We will have EFRAG in Europe, we will have SEC in the US. So it will not be a world standard, but we should achieve interoperability. In Europe, if you comply with FRAG, you will comply automatically with ISSB, and this would be a very decisive progress. I hope we can achieve the same interoperability on the US side, and SEC being as close to ISSB as possible. So there are convergent forces, we will work on them. And perhaps last, again on geopolitics, Agustin, a word on China. My guess is that this will be the key factor of balance, be it on dispersion and on convergence. As far as China remains in the climate agenda, remains committed, and as far as despite the rivalry between, let's say, the US and China, for obvious reasons, on climate, we can have coordinated and common action, then I would be optimistic that the convergence forces would be stronger than the dispersion ones. But we will see.
Well, thank you very much, all of you, and thank you very much, Francois, for this last commentary. I think that you put a very clear metric in front of us, how to assess it, and we should report next year in this panel how how it went between convergence and dispersion. I think it's a very attractive framework to evaluate our progress. I hope definitely that convergence imposes itself based on what Stephanie and Lesecha had mentioned, which is the very important and urgent need of international collaboration and cooperation in all these fields, and in particular in climate and environmental issues. So with this, I think we have reached the end of this panel. I am supposed to hand over the floor to Luis for him to make a final comments. But allow me just 2 minutes to make a final comment myself about Luis and the Green Swan conference. As you all know, Luis will finish his this mandate, his tenure at Deputy General Manager here at the BIS at the end of August. We definitely will miss him for many reasons, but I would say a very important legacy that he's leaving here at the institution is the commitment, the enthusiasm, the leadership he has shown in all the different aspects related to climate change, and the obligations that we have as key institutions, central banks, financial regulators, with respect to this topic. He was the driving force behind this conference, and behind, as I said, many of the work on green finance. And we definitely will miss him as a very important driving force in this institution. He has already left deep roots here, so I'm sure that we will continue to deliver. But well, nevertheless, it's always a great pleasure to have him around. I'm sure that he will come and he will continue contributing in this field. He will be a permanent invitee to this conference and to other activities of the BIS. But I just want to pay tribute to the great job that Luis did in this respect, and in particular in the Green Swan conference. So thank you very much, Luis. The floor is yours.
Thank you very much, Agustin, for these very kind words. And I'm sure that I will be very happy to continue this effort with all the community and all of you. So this brings us to the end of day 2 and the conclusion of this Green Swan Conference 2023. Thank you to all the speakers on the program, to all of you in the audience, to the colleagues at the Central Bank of Chile, the South African Reserve Bank, NGFS Secretariat and the BIS teams who have worked very hard to bring this conference to life. I would like to also give a special thanks to the technical team here at the BIS who has allowed us to run this conference very smoothly, and also thanks to all the participation and in particular of all of you in the audience again. So thank you and goodbye.
Bye-bye.